Welcome to County Portal, your simple source for local government services and public records. Let's get started.
So, do you have to pay taxes on your Robinhood account? The short answer is a big, definite yes. It's a common question for new investors, and it's really important to understand. The key thing to remember is that the IRS doesn't care if you use Robinhood, Fidelity, or any other brokerage. They care about your investment activities. Anytime you make money from your investments, you'll likely owe taxes on it. Let's break down exactly when you have to pay. The most common situation is what's called a taxable event. The biggest one is selling a stock, ETF, or cryptocurrency for more than you paid for it. This profit is called a capital gain, and it's what the IRS wants to tax. It's crucial to understand that you don't pay taxes just for buying a stock or for holding it while its value goes up. That increase in value is an unrealized gain. You only owe taxes when you sell and lock in that profit, turning it into a realized gain. Another taxable event is receiving dividends. Many companies pay out a portion of their profits to shareholders, and that dividend income is taxable in the year you receive it, even if you automatically reinvest it. Now, let's talk about those capital gains because there are two main types. First, there are short-term capital gains. This is when you sell an asset that you've held for 1 year or less. These gains are taxed at your ordinary income tax rate, the same rate as your job's salary, which can be quite high. Second, there are long-term capital gains. This applies when you sell an asset you've held for more than 1 year. The government wants to encourage long-term investing, so these gains are taxed at a much lower, more favorable rate, which for many people is 0%, 15%, or 20%. But what if you lose money? This is called a capital loss. The good news is you can use your losses to offset your gains, which can lower your tax bill. If your losses are greater than your gains, you can even deduct up to $3,000 of those net losses against your regular income each year. You don't have to worry about tracking all this by yourself. Around February of each year, Robinhood will send you a tax document, usually a consolidated Form 1099, which details all your sales, dividends, and other transactions. This is the form you or your tax preparer will use to report your investment activity to the IRS. So the bottom line is, if you sell investments for a profit or receive dividends on Robinhood, you need to be prepared to pay taxes. Please remember, this information is for educational purposes only and I am not a tax advisor. You should always consult with a qualified tax professional for advice tailored to your personal financial situation. Thank you so much for watching. If you found this video helpful and want more simple explanations on finance and investing, please hit the like button and be sure to subscribe to the channel.